Hello, in today's video we're going to be looking at the Nasdaq futures. So this is the symbol NQ, the NQ E-mini futures for Nasdaq. Today is Monday, June 9th, 2025, and we're looking at a chart for today's session, starting with the New York RTH session, which opens at 9:30 a.m. So we are using two of our indicators. One is the DTGPS Futures CFDs Daily Key Levels Indicator, and the other one is our Day Trading GPS Dynamic VWAP Bull Bear KPL Navigator. So we're using, to trade futures, we're using these two in conjunction with each other. Okay, so first off, the levels that you see come out on your screen at 9 a.m. in the morning, 30 minutes before the 9:30 RTH open. And you can also use this indicator on other sessions. So we also have a setting that you can use it for the London session. If you're someone that trades the London session, or you're an overseas trader and you're trading in a different time zone and you prefer the London session, and we also have levels for the Asia overnight session as well. Most people, though, trade the New York RTH session, but just so you know, if you're a trader that trades throughout the day and night, that we do have levels that come out for each one of those sessions. So the London session levels come out at 1 a.m. Eastern, and the Asia overnight session levels for Nasdaq futures come out at 6 p.m. Eastern. Okay, so like I said, you get these levels at 9 a.m. Typically, the way that I trade is I normally, unless there's some spectacular news event going on that may override the typical thinking of starting to trade the session. Usually I don't trade the pre-market, and I just wait till the 9:30 open. Everyone's different though. Some people like to trade in the pre-market as well. If you do like to trade the full pre-market, for the US pre-market at least, which, as we know, stocks open up at 4 a.m. in the pre-market. So if you're the kind of trader that likes to trade, say, from 7 a.m. in the morning, and you like to take advantage of news events that often occur at 8:30, then you can use the London session levels on our indicator for the bull bear key price level and support resistance levels for the US pre-market. But if you just trade the RTH session, then these levels come out at 9 a.m. and the session starts at 9:30. Okay, so we have the bull bear key price level for today, 21,793. You can have up to 10 levels of resistance and 10 levels of support. For the purposes of just trading most sessions will be between R4 and S4, with even the greater majority of those being somewhere between R2 and S2 on most days. But there are days in which we will get increased volatility, some kind of world events happening and everything, and so on those days you may see levels that go above R6, R6 to R10, or below S6 to S10. But those happen infrequently, but if they do happen, you can turn on the additional levels so you have those as well. As you can see here, we also have the midpoint levels turned on. Those are optional to turn on. I personally like to have them turned on as well, so I can see those as well to gauge continuing momentum in either direction. And also we have the labels, the line labels here, You can individually control the line labels with our indicator as far as the size. So here I have these on a larger size, the main levels, and I have the midpoint levels on a smaller text size. So you can basically create whatever type of canvas that you want uh, with the different levels as far as having what sort of look and feel that you would like to have when using the indicator. So we also have our day trading GPS dynamic VWAP bull bear KPL navigator. This is a specialized anchored VWAP that basically auto adjusts for different symbol types, so it has a different auto anchoring for futures and CFDs. That's different from the anchoring that it will have for stocks and ETFs, and a different anchoring for Forex and cryptocurrencies. So as you can see here, this orange, you can make this whatever type of line style that you want, but for purposes of this video, I've gone ahead and made the dynamic VWAP, the circle line in orange, to contrast it with the yellow bull bear key price level. So if you want to think of the levels here as far as the bull bear key price level, the midpoint, and the main levels as the static levels for this session, and then the dynamic anchored VWAP as the dynamic key price level to be used in conjunction with these static levels. We also have our deviation bands here. This is an optional dashboard that you can enable if you'd like to see the prices as time progresses of showing you the price of where the symbol is at now, and then the different bands, as well as the dynamic VWAP KPL price and the bands below it. Okay, so we've marked off the 9:30 open here. Typically, the way that I like to trade is I like to, unless there's just some sort of spectacular news event happening, on most sessions I will wait for the initial shakeout to happen rather than jump in right off the bat. Futures in general can be very volatile in the initial shakeout, so in most cases, at least for my trading style, I like to see the fallout from the initial shakeout before entering positions on most days. So in this particular case, this is the opening candle here. As you can see, we had to move down right to the VWAP, and then we had to move up from the VWAP, and then we had a slam move down to the first band on the VWAP below, and then it nearly went to mid KPL S1 level here, and then we had a surge back up, and then we finally had a candle here which blasted above both the VWAP and the bull bear key price level at 948. Okay, so we're going to look at the data window. On this candle right here, the close is 21,804. So this is the candle at 948. So this is your entry here. Your stop loss would be a quarter level below the bull bear key price level. So that would be 21,770. So your entry is 21,804. Your stop loss is 21,770, a quarter level below the bull bear key price level. Okay, and you just do that by just going in the middle here. We don't have quarter price levels, but it's pretty easy to see where that is. Just putting it in the middle. You can also take a calculator and just add these two together, divide it by 2. But just roughly in the middle here is the quarter level below the bull bear key price level. That would be what would be considered your normal stop loss. If you wanted to have a tighter stop loss in that, then you could put one just below the VWAP. That would be basically up here around 21,780, 21,781, so that would be like a 10-point difference. If you wanted to have a more liberal stop loss, then you would want to put it below the wick of these candles, which happens to be right where this mid KPL S1 is, and that would be 21,746.75. So that is a pretty large, stop loss. Like I said, this would be your normal stop loss for something like this. If you wanted a tighter one, then putting it a few points under the VWAP, that would be a tighter stop loss if you feel more comfortable just having a tighter one. If you're the kind of traded much more liberal one, then you could just pick the mid KPLS1 here. Alright, so as we can see, we did get a little bit of a move up and then a move back down to the VWAP before bouncing off the VWAP and resuming the uptrend. And then we went right up to the R1 level, 21,885.75. We went a little bit above it here with this wick. We'll go ahead and see what that price was. 21,890.75. So the prudent thing to do is just go ahead and set a take profit order either right at the R1 of 21,885.75, or you could put it maybe a point below it, which would be 21,884.75, or somewhere in between those two. But we have the exit of the long entry here at the R1 level of 21,885.75. That's 81.75 points times $20 per NQ E-mini contract equals $1,635 profit per contract. So if you're just a one contract trader, then that's $1,635. If you're trading multiple contracts, then if you're trading 3 contracts, then that's roughly $5,000. Now, as you can see here, we had a move back down to the dynamic KPL VWAP, and we also had a retest here. So if you wanted to do additional entries later on in the session, then you could certainly use this as a guide here, this dynamic KPL navigator, throughout the rest of the session. As far as your bull bear dynamic line in the sand. And if you wanted to take additional entries here, then your stop loss would be slightly below the bull bear key price level for say a normal stop loss. If you wanted a tighter stop loss, then you could go halfway between the dynamic VWAP KPL navigator and the bull bear KPL. But as you can see here, we did get a move back up. So if you did take this secondary trade here, it never would have hit the stop loss, and eventually it went right back up to R1 again. We'll take a look at this data right here. So we had a high of 21,885. So again, that comes into what I was talking about earlier. When you're putting your take profit, you can either put it right at the level or say a point below or somewhere in between those two. But usually right at the level or say a point below the level will usually do the job just fine. As you can see here, we did get a slight move above the level, and here it went right up and stopped at 21,885. So if you had put it 1 point below at 21,884.75, then you would have gotten filled up here. And as you can see later on in the session, towards the end, in the last 15 minutes of the session, we did get a move down, where we did get a move below the dynamic VWAP KPL navigator, and we got to move just right above the static bull bear KPL for the session. In most cases, though, the best moves are going to be usually found in the first 2 hours of the session. So if you're looking at 9:30 to say 11, the move's pretty much over with. Here we have basically 11:30, so that's the 2 hours into the session. So you got your initial move here, you make your profit, and then you quit for the day and go do something else. Alright, but if you're the kind of trader that likes to trade throughout the session, I don't personally recommend that, because a lot of times over trading can lead to losses. In this case, on this day, if you're taking out a long entry, you would have another nice gain here, because you would have an entry somewhere in the 21,000 814 to say 21,824 range, and you would have made another 60 points or so here, which would be another $1,200 a contract. So it's just up to the individual trader. Some people do overtrade quite a bit. That, in my opinion, is not a really good habit to get into. There's always another trading session tomorrow, and one after that, and one after that. So the key is managing your risk and never adding to losses, having a reasonable stop loss that's well placed, and also having your targets and getting out of those targets. Now, if you're the kind of trader that likes to trade multiple contracts and you like to take off risk and then leave a runner to see if maybe it would go all the way up to R2 and then to R3 or R4, then you would get out of the majority of the contracts here at R1, say somewhere between 70 to 80% of your contracts. If you're a one contract trader of a regular E-mini, the only way of doing that is if you trade micros. So if you trade 10 micros instead of one E-mini contract, it's basically the same, but with micros, it can give you a little more risk management, as far as if you're the kind of trader that doesn't like to trading more than the value of one E-mini contract, and you have 10 micros, and that way, if you want to get out of 7 or 8 of them at the initial profit level here, then you can leave a couple of runners and adjust your stop. So either adjusting your stop to break even, or adjusting your stop somewhere between, let's say, the mid KPL R1 and the bull bear key price level here, which would have been the quarter level. As you can see here, if you did that, you would have gotten stopped out, but you already would have made the majority of the profits here when you got out of 70 to 80% of your 10 micros. But if you just traded one E-mini regular contract, then you just would have sold it up here and just been done. Alright, so we invite you to learn more about both of these indicators, the day trading GPS future CFDs daily key levels indicator, and also our dynamic VWAP bull bear KPL navigator. You can see in the description of the video there are links there for the indicator package, which is the day trading GPS future CFDs daily key levels suite, which includes 4 indicators. So it includes the future CFDs daily key levels indicator, also the dynamic VWAP bull bear KPL navigator, and it also includes our supply demand equilibrium zones indicator, and also our order block finder indicator. So the future CFDs key level suite includes 4 different indicators. We're also having a sale for summer right now, where we're offering a promo code for 50% off, either on a monthly subscription, an annual subscription, or a lifetime subscription. If you also trade other types of symbols like stocks, ETFs, Forex, and cryptocurrencies, then I invite you to also consider our day trading GPS gold indicator suite, which includes all 5 of our daily key levels indicators, one for future CFDs, one for Forex and crypto, one for stocks and ETFs, one for the XPX S&P 500 index, and one for the Nasdaq NDX index, as well as our other 3 indicators, the dynamic VWAP, supply demand equilibrium zones, and the order block finder. An additional benefit to the lifetime access subscription for the gold indicator suite is not only do you get lifetime access to all 8 indicators, but you also get the additional benefit that in the future, when we release additional TradingView indicators in the future, you will also get lifetime access to those at no additional charge. And then when we release our upcoming auto traders, that will give you the entries and exits and stop loss automatically on the chart for each trade on our auto trading strategy. When we release those, we'll be releasing our first one will be for trading futures, and then we will also be releasing additional ones for trading stocks, ETFs, and also the XPX index for trading options on that, and the NDX index for trading options on that. So eventually we will release several auto traders that will do the entries, the exits, as well as the stop loss automatically for you on the chart. When those are released, the gold indicator suite will be going up significantly in price. But if you have the gold indicator suite lifetime access plan for one payment, you will be getting those at no additional charge when they are released. So I thank you for this video. Please like and subscribe to our channel, and I appreciate you viewing tonight, and also wish you prosperity and good trading in the future. Thank you.